And welcome to the VSA Capital Tech and Transitional Energy podcast. Hi, Phil. How you doing?
Doing very well, thank you very much, Andrew.
Are you enjoying National Curry Week?
Oh gosh, I haven't realised I've not had one yet. All right, better get my order in.
Go and have one. And here's a quiz question. I'll give you the answer maybe at the end. What is the highest stack of poppadoms ever been made? How tall?
I don't know.
I'll give you the answer next, otherwise I'll forget. It's 1.72 meters. That's a lot of poppadoms.
But that's nearly the height of. Hey, you could do your own height in poppadoms. Why can't I think? Can we? Anyway.
Something like that. And have you been to see James Bond?
No, not yet. But it's had fantastic reviews.
It was great. I loved it. I could go and watch it again. But I love Bond. Anyway, look, we should probably let's turn actually to tech and transitional energy. It's been a hell of a week, this market for the space, hasn't it? It's been all over the shop, really. I mean, at the beginning of the week, transitional energy stocks got absolutely smacked. I mean, I look at some of the American ones. I mean, lithium cycle was down 8%, Globe was down 7.5%, Nano One down over 6%, Array Technologies down 7%, Blink Charging down 6%, Workhorse down 6%, Ballard Power down 6%. It was horrible. And a lot of the UK stocks got hit too. I mean, obviously, we know that there's this sort of, huge global concerns, big geopolitical things going on. Interest rates are going up. Inflation's coming in. We've got the gas crisis, the fuel crisis in the UK. I mean, it's all, and it's October. It always goes wrong in October, doesn't it? So it's been quite a week. And obviously, the UK stocks in tech and transitional energy also got absolutely clobbered. It requires a bit of a brave heart at the moment, I think, to just hang on in there.
It does. A case of the classic seeing through the doom, and a lot of it is all about inflation is or the risk of inflation, and I'm sure you and I probably remember double-digit in inflation. Some of investors do, but this is the first time for many years that inflation's been seen as a bit of a risk, and of course for a lot of the companies, especially on the tech side, where their valuations are based on discounted cash flow forecasts. Obviously, the interest rates impact the discount rates, and hence some of the volatility on the tech side. But it's an unusual situation, isn't it, Andrew? Because at the moment, everyone's trying to recover from the pandemic, and that's driving all sorts of stresses on the supply chain and getting hold of employees. And it's a case of, is it really a longer term thing, or is this something that we're going to get through in a relatively short space of time?
Well, I'll tell you what I am now starting to see. I mean, we've talked about inflation and supply chains for a long time here, pointing out that probably today inflation in the UK is running in double figures, I reckon over 10%. But actually what we are starting to see already, and I'm hearing from CEOs that I talk to around the market, and I talk to a lot of different sorts of CEOs, not just in the sectors that we cover, that actually they are seeing demand slightly coming off because the consumer his pocket is going to get smaller and demand will come off. And because of that, what will happen, of course, is that then the commodity prices will come off, and you'll get actually, because we've accelerated so quickly upwards, you get an acceleration downwards. And actually, it probably will resume back to normal, although I think the supply chains will take until the middle of next year to really get back to normal. But I think if the central banks globally, who appear to be determined to try and keep things pretty controlled, can hold their nerve and just let interest rates maybe go up a tiny bit, by the middle of next year, I think we will see it back under control again. There's a prediction.
That's a very interesting thought, particularly on the consumer side and consumer spend, because what I always remember is that the US economy, that the consumer spends on like 70% of the US economy, but has a huge bearing on the economy. So if behaviour changed, and of course you've had all that pent up savings, haven't you, post during the pandemic period, and people haven't necessarily been spending on e-commerce, as we know, but not necessarily, a lot of money's being saved up. So some of that's kind of, that's flushed through as well. Interesting. That's an interesting thought.
There is pent up savings, but that doesn't mean to say they have to be spent. Some people may decide actually, we've made the savings for a deliberate reason. And again, it also depends where you're going to spend it, because whether you're spending it on big ticket items or small ticket items. One big ticket item obviously counts for a lot of small ticket items. So, you have to get a bit of a feel across the whole piece, shall we say. Anyway, I would say in the meantime, though, actually, I mean, again, results, of course, are always backwards looking and not really forwards looking, although companies do give an outlook statement. But in general, I would say that the results coming through are still looking pretty good. There seems to be what I describe as a cautious optimism still coming through from companies.
Yeah, and I think when results are good under difficult circumstances, it means when things ease, the results can be even better, and that's a real driver of share prices.
Anyway, there we go. That's a little bit of macro there. Hopefully, that's anybody listening, that's been helpful. Now, also, it's maybe just let's touch base on a few of our corporates, shall we, Phil? And there's also a little bit of a story that we've been looking at that goes along with them. But we were appointed as broker to S Ventures, actually at the very back end of last week. S Ventures are basically a buy and build brand company. Ticker is SVEN. We think that it's got a very talented management team run by Scott Livingston. They're basically building and buying brands in the sort of the food, what I describe as the kitchen and the bedroom. So they've got some interesting ones already, but they've obviously got some more targeted along. We think it's going to be a very exciting ride, and obviously it's the spec. We like the brand space. We're doing an awful lot. Then also our other client, Samarkand, which obviously is e-commerce and brands. They did a big deal in South Korea, didn't they, Phil?
Yeah, it's e-commerce technology, and they are a client of ours. The ticker is SMK. It's Aquis listed. It's 100 million market cap, and they've got a cross-border e-commerce software platform. And these are, look at the US market valuations. These are highly valued. And clearly theirs is getting highly valued by their clients. I mean, they won a contract in South Korea. They recently opened offices in Japan. They specialize in the Asian markets for e-commerce, but the client they've won, Amor Pacific, has beauty and personal care brands. It's a listed company on the South Korean Stock Exchange. Market cap of over 7 billion, and 20% of its sales are into the Chinese consumer base. And investors may remember that Samarkand's software links in with all the main e-commerce platforms in China, the logistics systems, the customs and government systems. It makes it happen. It makes it easier for brands to get into the China market. And this company in South Korea is looking at a lot of its sales are through third parties. It's moving to new direct sales, and for that it needs software. The software it's using and has chosen to use is Samarkand's, so it shows the power of their proposition.
Oh, look, I think a lot more news to come out of Samarkand as well. That's going to take the stock price a lot higher. But the reason that actually I think we've also been having a little bit of an interesting debate recently between aggregators and accelerators in the whole e-commerce brand space. And there's been a lot of what I would define as, or I think most people would define as, aggregators out there who obviously are trying to aggregate all the e-commerce platforms to sort of give you a better access to things like Amazon, etc. You probably understand this better than I do, but we're moving away, I think, from aggregators, aren't we, to accelerators. But there's a huge amount of money being raised here now. Actually, Samarkand is basically a hybrid between an accelerator and an aggregator, isn't it?
Yeah, that's right. So the aggregators acquire brands, a very large portfolio of brands, and then sell those over the major e-commerce marketplaces. The accelerators have the brands, but are very, very focused on examining the sales within the brands to see where they can make changes to the sales profile. So it's got proper marketing analysis of what they've got in those brand portfolios to specifically accelerate sales on platforms.
Yeah, and I think maybe this is I think this is a $6 trillion e-commerce market globally, isn't it? I mean, the size of this is huge. Which is why our client Samarkand has so much potential, because they are so well set up and able to do things that just these other people can't do. And You know, a lot of them are US. These people. You know, the aggregators of people like Thericio, Berlin, Perch. You've got accelerators like Pattern, Packable, Spreetail, NetRush. You know, they are raising hundreds and hundreds of millions of dollars on massive valuations in America, and yet actually none of them, in my view, are as good as Samarkand. We do have our own little problems in the UK. Obviously, the Hut Group is still getting smashed. But I mean, I think one of the problems with the Hut Group is that, you know, they grew very, very fast and perhaps weren't as well organized down at the basic level as perhaps people thought they were. The building blocks weren't necessarily quite right. Anyway, that's, you know, it's a very interesting space. Anybody actually wants to talk to us more about this, then do, because I'm finding it quite interesting. And obviously, we love the whole brand sector. We're about to do an IPO of a new brands cash shell with some management that are exceptionally well known. They're names that people will know. When we can announce it, we will. That could be very exciting. Don't know if you've got anything else you want to say on that, Phil?
I'll just quickly on the global e-commerce market is that Andrew's right. It's a $6 trillion market. The China market is 1.7 trillion, and that's why Samarkand is focused there and doing very well.
Yeah, I mean, it's actually made a little point there, because the China market clearly is huge. There are some people who are a little bit concerned about what's going on in China with this sort of prosperity for all policy. But I think if anybody's going to get hit in that market, it'll be the big brands, you know, the Gucci's, these sort of people, very expensive ones, Ferrari. The sort of brands that these guys are doing are small brands, small ticket items, and they will continue. I don't see an issue there at all.
Yeah, that's a good point. Right.
Right. We probably should do some results, maybe. What you got in the results column this week, so to speak?
Cerillion. This is ticket is CER. Market cap £244 million. And they had a trading update for their financial year ending September. And I've met Cerillion before. Really good company. This is telecom software. It's software for billing and charging, customer relationship management software, and they support telecoms companies, obviously, but also utilities, financial services, and they've got over 90 customer installations across 40 countries for their software. So clearly, there's a market need for what they do, and they're very successful at it. And they've saying in their trading update that they've entered the second half of the financial year with a record level of new orders and record back order book. So that's good news. They've said that they've won two very large contracts. And they said that their profit before tax expect to be significantly higher than the current consensus market forecast. So there you go. That's and they've got cash as well. They've got 13 million in cash. So that was a very good trading update from Cerillion. And Netcall, I don't know if you know that company, Andrew. Been around for a while.
I know of it, but I didn't see the results. So tell me more.
Yeah, Netcall had which results were this? I think it was full year. But anyway, let's just quickly go into this. So Netcall is they're best known for their contact center management software and the way that phone calls are queued up, handled, and prioritized. But they've also developed a software platform that uses something we know about is intelligent automation and customer engagement solutions. So what's this all about, Andrew? Well, things like you get the chat bots on websites when you want to interface with customer service. They also have artificial intelligence, and that includes robotic process automation. So like Blue Prism, and this is where you are very, very intelligently handling things like emails, interfacing with very large ERP systems, finance systems, and automating payments, for instance. But they give, just in terms of their results, their cloud-based business had seen their sales up 26%, and their contract value was up 10%. So that was a good set of revenue growth, and that fed through the profits, and they were up 21% to £5 million. But it's well worth a look. I was looking at their website and some of the examples of their work. So, for instance, they did. This is robotic process automation, Andrew. This is where the computer kind of takes over from the human being in terms of being able to, it's pre-programmed to very quickly do things that humans would do. One of their examples is organising seating at major events. And in fact, in terms of COVID, you have to space people out. You have, recurring events happening in theatres, concert venues, whatever it is. And on one of these, called it Night of the Proms, series of concerts that needed manual seating organisation, and it took to organise 30,000 customers. 7 people worked 12-hour days, and it said per reseating arrangement was 1 minute 40 seconds, and they did it using RPA robotic software. And this was for a 63,000 booking event, and it took 14 seconds per seat.
I love that. It's a great stat. I often wonder whether I can't decide whether I like talking to these robot, what do you call them, chatbots.
Yeah, chatbots.
Because I find them quite frustrating sometimes because they don't always understand what I'm trying to say, but I think that could be my problem, not their problem. And I know that we've been looking at this whole sort of robotic processing AI. There's some quite interesting small companies coming up, similar to Blue Prism, because it does speed up things. What was it we were talking to someone the other day that just if you've got a SIP or something with a Hargreaves Lansdown, you want to move it to AJ Bell, maybe because Hargreaves Lansdown won't do Acris and AJ Bell does. But it takes 30 days or something for Hargreaves Lansdown just to respond to your request to move, let alone actually move it. By the way, if I've said something wrong about Hargreaves Lansdown there or AJ Bell, please ignore it. I was used to doing it as an example. All right, so don't get the lawyers onto me quite yet. But I mean, but apparently this sort of robotic processing, whatever, you can put it into the systems and it speeds the whole things up, and you get a reply within about 30 minutes or something. Is that right?
Yeah, that's right. What they do is, and why I can imagine some of the large SIP providers maybe look at this technology, is it almost takes an email inquiry and it can pre-filter, what's being done, and to sort things out, sort inquiries out, prioritize them. But it can be robotic process automation can be applied to all sorts of things where it's kind of repetitive tasks, the same sort of information is coming up. Or there's the similar sorts of data need filled in, or each time in a transaction, whatever that transaction may be. And so, it's being increasingly used, big market opportunity, and not surprising, Blue Prism has been acquired. People are seeing the opportunity. Yeah.
Now, look, one other result, and actually, I think they may have had a webinar call today, which I was supposed to do, but I never did. But you may have done, was AMTE, which we've discussed a bit on here, and that they had results at the beginning of the week. You've got any thoughts there, Phil? Or if you haven't, I've called you out.
Have you caught me out? No, not at all. They've got this is battery tech, lithium-ion, sodium-ion battery cells. It's their full year results they announced, didn't they? And they've said that they've there were some interesting highlights in there. They've been involved. They've got a new government-funded project, which is based on lithium-ion tech for automotive. And on the steering group for that, they've highlighted that BMW and Arrival are on that project group, which was interesting. They're involved, part of the framework agreement with the UK Battery Industrialisation Centre. So there's a few things going on. Seems to be making headway on factory.
They lost £3.1 million. Not that's, when you're a startup, you're going to lose money. So it's not really a criticism there. I'll tell you what worries me. We know, Phil, that to develop one new battery is incredibly hard and takes a lot of time and money. To try and develop 3 new batteries is like, whoa. I just think it's too much myself. I think there's a webcast. I need to go and listen to it. And we would love to go and meet the management. Could somebody listen to this? Please introduce me to the management.
Yeah, absolutely. It's not more. It's nonetheless, it could be interesting technology. It'd be nice to find out a bit more about it. That's for sure. Yeah. Just quickly moving on before I miss this one. Here's a company that is classic UK, very well established, been on for a long time. I think, originally family owned and still is FW Thorpe. Come across those before, Andrew? It's lighting technology.
I certainly do, and I'll tell you why. I've got FW Thorpe in my mother's IHT portfolio that I run, and their pre-tax profits were up 26% this week. They put in a final divvy of 4.31 and a special divvy of 2.2p. My mother was delighted, and they said they put a very solid start to the year. So, by the way, I do run my mother's IHT portfolio, but I actually run it with my brother, who's a fund manager, and we do it almost purely on a quant basis, not looking at the company. So half the stocks that she owns, I don't even know what they do. But there you go. I did spot FW Thought, you see. That caught you by surprise, didn't it?
Yeah, it did. Yeah, well done you. But yeah, very good. A very good set of results from there. Yeah.
You won't catch me out, Phil. Now, not a result, but news. And I think it was quite big news, actually, although the market maybe didn't realise. But IP Group announced that Alan Albury, that the CEO, was stepping down. Also, Mike Townend, the FD. You know, these guys basically built IP Group. So it's actually pretty big news that they're stepping down. I actually think IP Group's now got so big and is so well established that it's fine. And maybe that slightly entrepreneurial spirit, it is time to move to a more, bigger company type scenario. But I thought that was quite big news.
Yeah, and I remember it. Well, you do. But in the early days when it started off, and people were saying, "Oh, what are you going to do with university spin outs? How do you build it?" I thought, what an amazing success. Well done, them.
Yeah, they have. I mean, I think Alan's done a great job there.
Yeah, that's tremendous.
Any other results you want to comment on, Phil?
No, it's a bit thin on the results front.
Well, I'm going to bring up something, actually, because you sent me a very interesting article, and I'm going to get your take on it, because I know that you just cannot resist reading. I think it was it the Engineering Monthly or something?
Yeah.
And this is not a Have I Got News for You, fill in the blanks competition. But tell me why you sent me that article and who you think it bodes well for.
Is this the article?
Sheffield Forge Masters.
Right,
the MOD are going to put £400 million, because they bought it out of receivership, into Sheffield Forge Masters, basically because it supports their submarines.
Correct. This was an article in The Engineer, which for all you budding engineers out there but interested in industry, I advise it. It's a super website. It's a great publication. And yeah, they highlighted the news that the MOD, so Sheffield Forge Masters was bought out by the Ministry of Defence because they make critical steel components that go into submarines. And yeah, the announcement is that they're planning to invest, this is the MOD, £400 million into the company over 10 years. So it's strategic technology for the UK. And my read across for that was on Pressure Technologies, who we've talked about before, that we do act for. We do work for Pressure Technologies. The ticker is PRES. Market cap is 26 million. And they develop and they make very, very large high pressure cylinders that go into submarines. They're in the Astute fleet. They're also into the Dreadnought, the new Trident fleet. So their cylinders are pretty critical in that the high pressure air is used for the weapon systems on board. I'm not sure if they use for ballast, but yeah, pretty critical components there, and they're the only folks in the UK that are making them.
Yeah, no, I mean, I thought it was a very interesting article. Pressure Technology has been pretty quiet recently, but I'm sure they will jump into life soon, because of course we love them also because they're big into hydrogen storage, and we like hydrogen storage.
We do indeed. Yes, they're working with Shell on hydrogen refueling stations across Europe, and yeah, it's the cylinders that they use for the storage.
Very good. Anything else you want, Phil, or we call it a day there? Because we're pretty busy. We're just closing up a £40 million fundraising for an IPO we're doing. So
yeah, we are very, very busy. And good to see that Facebook is back up and running on WhatsApp, and their engineers have got it all sorted.
I'm told instead of WhatsApp, you should use a thing called Signal now. And somebody told, I said, what? I've only just got the hang of WhatsApp. And they went, Andrew, you are a dinosaur. The BBC was right. You're a dinosaur. On that note, I will call it a day. And as we always say, if anybody's got any comments on what we've got to say, anybody wants to introduce us to interesting companies, anybody wants us to talk about anything, we're always open to discussion. This is just me and Phil having a chat, trying to give everybody a little bit of an idea of what we're thinking this week. So please do get in touch with us. And Phil, I'll speak to you next week.
I will do. Take care.